With us now is Eddie Hobbs explaining why 2009 needn't be as gloomy on the personal finance front as some would have you believe.
Eddie, welcome to the show. Right, Eddie, let's talk about positive aspects. You actually think 2009 financially we're in a better position, we're more hopeful than we were last year, which people at home would be thinking, what, you're mad, explain yourself. Yeah,
because you see, financial markets are typically about 6 months ahead of economic markets. So generally they'll predict or see an economic recovery about 6 months in advance. Okay. And so the story that sort of fell out in 2008 in financial markets, we're now feeling. So, for example, rising unemployment is what we call a lagging indicator. It occurs at the end of the chain. Whereas people like me look at leading indicators, what's happening at the front of it.
The green shoots.
The green shoots, yeah. And 2008 was an unmitigated disaster because stock markets collapsed from, the Dow Jones, which is a big American measure, fell from 14,000 to about 7,300 or 400, and it's now around 8,000. But a number of very interesting things are happening. Firstly, unlike the 1930s and a lot of what I would regard as misleading commentary and comparisons, there is just an enormous amount of cash on the sidelines in world markets, and it's absolutely staggering. It beats the build-up before the Second World War, and that cash is now getting nothing if you leave it in a bank. And we're talking about trillions of yen, euros, and dollar. The United States has been hoovering in money. This is US government treasuries. They create debt. It's the IOUs. Give us your cash and we'll pay it back to you in 10 or 15 years' time. They're now paying less than 3% for their money, the American government, and they're borrowing trillions. So this huge, big lump of money is going into the US government, and it's the biggest economic poker game in history because the money is going into the US government by investors, big institutional investors, on the assumption that we could be entering into a long-term deflation, depression type thing, and this is the safest place to put it. Yet the US government is taking the money, thank you very much, and it's trying to create inflation, which is the opposite of what the investors are giving the money for. So who's going to win that? And my bet is on the US government. They just keep creating enough money. Now that creates another problem later. So that's part of their stimulus package and the money they're putting into their banks. That's another good reason. Another reason is that the Baltic Freight Index, which is an index of futures on freight movements around the world, literally fell through the floor last year, and it's now beginning to recover. It's above its lows in 2002, which is the big last dip. Small stocks have begun to outperform large stocks, which is very unusual in a recessionary market. Mortgage applications are on the increase again in the United States and in the UK because people are seeing there's no value again in property markets. So we may be close to the bottom of falling house prices, particularly in the United States. I look at the United States a lot because that's where the problem started. That's where the recovery, the early signs of recovery are going to begin. There's a rallying point around the new President, Barack Obama. So they're all the positives. Now, the negatives are pretty overwhelming as well, so I won't bore everybody to death with those. But there's still a very high risk that, this is going to last a long time. But I'm on the other side of the fence. I actually believe that financial markets this year are going to literally go through an enormous rally because they're hugely oversold. They've factored in a multi-year recession. And all that cash is it's like a dam. It's going to have to burst out at some stage into something, and it's going to come into property, it's going to come into blue chip shares and so on. And the Americans aren't going to stay out of the malls for too long because it's what they do. It's like us staying out of the pubs, And I think therefore that there is still a hope that the second half of 2009 will see the beginning of a fragile recovery in the United States and in Europe.
Okay, so huge. Barack is going to save us, or America.
Well, he's a rallying point. I mean, he's just a human being and he makes mistakes.
What, really? Yeah, read some of the press.
So if you do have cash, then
get rid of as much debt as you possibly can, or shed as much of your debt as you possibly can. Now, because people would say, well,
how do you shed
my
debt?
little nest egg would probably wipe out my debt, but what happens then?
Well, I mean, after retaining about 6 months' lifestyle costs in cash, you should use whatever available resources you have to clear your high-cost debt, your credit cards, your term loans, not your mortgage, but the higher-cost stuff. Because at a time of low inflation and disinflation, in other words, 1 or 2% inflation, debt is very, very expensive, and your bonuses, your earnings, your commissions are all being cut back. So actually, feeding debt is a very hard thing to do. So you should definitely look at bringing down your debt insofar as you can. I think that one of the things the government could be looking at, if it's not already done so, although I don't have a lot of confidence in the intelligence inside the Department of Finance, to be honest. I think there needs to be a clean out in the Department of Finance for the incompetence of the civil service in the last government, and the government itself, of course. But one of the things they could be doing is allowing people access to their pension funds. Small business people throughout the country could be allowed to take their capital back out of the pension funds they've built up over the last 5 or 6 years, because they're not getting the capital from the banks to bring down their debt, as well as pump money into their businesses, subject to maybe an interest penalty of 10%, because they got tax relief on the way in. And that's available, for example, in the United States. And if it were available in Ireland, it would create a pool of money, a potential access to a pool of money of 40, 50, 60 billion euros, depending on where you actually open the key to the lock. The other thing that you should be doing, I think, is you should be buying gold. And I've been saying this for years now. Because gold is a hedge against a declining dollar, rising inflation and uncertainty. There's only about 4 swimming pools in the world, Olympic-sized swimming pools of gold. That's the total gold in the world. And you can buy gold as an exchange-traded fund through a stockbroker. Like there's one called Luxor, Lyxor, Gold Bullion Securities. Or you can contact a Dublin agent called Gold and Silver Investments. And you can buy Perth Mint certificates from the Australian government. And you can invest in gold that way, rather than take the physical delivery of gold. And about 5 or 10% of your investments should be in gold, and should always be in gold anyway. I mean, the agents do this as a matter of course, whereas we regard it as quite unusual. But gold is a store of value, so it's an insurance against catastrophic falls or the value of other assets. Also, another area, I think that when we come out of this cycle, the next cycle is going to be marked by very, very high inflation, because of the level of debt that's being created in the world, and also because of the return to the commodity bull market, rising oil prices. And you can protect yourself against that by investing in inflation-linked European government bonds. We're very cheap at the moment, and the way you invest in those is there's a fund that Standard Life operate called the Euro Inflation-Linked Bond Fund. And it is a spread of largely French bonds that you can invest in through that fund.
Okay, Eddie. Well, look, those tips and others indeed, like do consider changing careers, selling things you don't need, and indeed moving overseas, are all found in the current issue, February issue of You and Your Money. Eddie is staying with us, and he will answer any of your finance queries or questions that he can. So if you've got a money worry or are concerned about anything financial, here's what to do. You text AM followed by that question to 53121, or indeed email us at ireland@tv3.ie, and Eddie will answer as many of those as he can after 9.